when you think about what are your assets today, if you're hanging out with idiots, you're probably an idiot.
Yeah. We were talking the other day about how
Jeez.
you're kind of the average of the 5 people that you surround yourself by, and I think that's extremely true. So if you can continue to grow your network and always strive to be around smarter and smarter people, I think that's going to bring you up, and you're going to see the world in a much different way, and it's going to increase the probabilities that you achieve what you want to achieve in life.
Right. And, what I was talking about is who are your teachers?
Right.
And what I found overall, because, my whole fascination is why are some people rich and why are some people poor? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But a lot of the times, the people that are getting poor is simply because they had poor teachers.
Yeah, that's right.
Their parents are poor, or they come from a poor background, or like in my case, they're all school teachers who think you've got a PhD, that's all you need.
Yeah, and unfortunately too, if they don't see the world the way it really is, they assume that the solution or the solutions that are presented to them by the central planners and the politicians.
Correct.
They just take that at face value as that, the solution for bridging the inequality gap, if you will, is just to tax the rich. We'll just take everything from the rich and we'll just let the politicians take what they want and then just give the table scraps to the poor, and somehow that will reduce the wealth gap. But as Margaret Thatcher said, that'll just make everyone equally poor. What we want to do is we want to make the poor and middle class, we want to make them richer.
Correct.
And for whatever reason, it's because those people don't have that financial education that you've been talking about for the last 30 or 40
Correct.
years. They assume that the way that you again, bridge that gap is by taking from one group, as though somehow there's like this fixed pie, and we have to realize that in free market capitalism, that pie continues to grow and grow and grow, and that brings up the quality of life for the people at the bottom. What was fascinating, going back to that last event that we did in Dallas that you referenced, is we did a property tour, and we saw a lot of Kenny's properties there in the Dallas-Fort Worth area, some of his apartment complexes. And after he took the group around,
100% debt.
Well, he actually had a whiteboard. Did he tell you that?
No.
Yeah, so he had a whiteboard. We did a tour, and he took that whiteboard and he put it in the office. And then he had all of the people in our mastermind group. He walked through the numbers, when he bought it, how much he paid for it, how he paid for it, and then all the refinances that he's done through that forced depreciation, and how that equals these infinite returns. Yeah.
We have no money in the deals.
Yeah, that's right.
And it's hundreds of thousands a month in income, tax-free.
Yeah, right.
Because of depreciation, amortization.
Yep.
But that's what we teach. But our schools say to go to school, get a job, and get a 401k. I'm going, gag me. I mean, I would never do that.
Yeah.
But if you had bad teachers or poor teachers, or your parents said, that's what you do.
Yeah. But even that in and of itself is a horrible argument. You just invest in the stock market, your 401k, because what happens is these financial planners, I'm sure you know this, what the game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up, right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980 or 81 adjusted for inflation, it was pretty much flat. But see, they don't tell you that.
Right.
They just cherry pick the data.
Of course.
They want to give to you in order for them to collect their fees. And my objective might help some people kind of think about real estate or assets in a different way. The first goal that I had when I retired is just to look at my monthly expenses and say, how can I get my money to cover those expenses?
Yeah.
You see? So then I know that I'm never drawing my savings down.
Right.
And I think it sounds easy and it sounds commonsensical, but very few people just kind of connect those dots and realize that if they can create enough cash flow with their portfolio to cover their monthly expenses, that is when you're financially free.
We were talking about the crypto and
those central bank digital currency.
Central bank and the IMF, SDRs and all this stuff. They're playing games with money big time right now.
Well, they're trying to control it. It reminds me of the quote that we were discussing actually the other day from Kissinger, who was the main influence on Klaus Schwab. But his quote was, if you control the food, you control the people. If you control the energy, you control countries. And if you control money, you control the world. And I think that's part of their objective. And we hear them out just explicitly talking about it.
That's real gold, and that's real silver. This is $2,000. That's concentrated money.
Yeah.
And this here is about $35.
Yeah, but more importantly, this has maintained its purchasing power over the last 5,000 years. So you can buy just as much stuff today with this little gold coin as you could have 5,000 years ago.
And that's why I invited you to come to our gold mine that we bought for nothing down in Utah.
Yeah, yeah.
But it's because we're taught to think differently, and that's what we teach.
Yeah.
The point here is that you are who you hang out with.
Absolutely.
And we talked about it, the gap gets wider and wider depending on who you hang out with. And if you're hanging out with village idiots, guess what? You're falling behind big time.
Yeah. And, I'm a perfect example of that because, like we were saying earlier, I retired in 2012, but I didn't start my podcast or my YouTube channel until 2019, the podcast not till 2020. And in the interim, when you're retiring, everyone thinks that life on the beach, just sipping pina coladas is going to be great. But that gets old after about 2 weeks, and you can feel yourself deteriorate mentally. Back in the late 90s, everything was .com, and they were getting these billion-dollar valuations. And it is true that the internet was the future. Yeah, it is true that the internet was the future, but not all those companies. 99% of them go bust. And I think it'll most likely be the same with crypto. There will come, maybe Bitcoin, Ethereum will come out winners in the long run and will be here. I don't know what purpose they'll serve. I don't know if they'll be transactional in the case of Bitcoin or be more of a digital reserve asset, store value. I'm not quite sure, what place it'll play, but I think it'll most likely play out the same way the .com bubble burst in the 1990s. I did the Fresh and Fit podcast. Those two young guys out in Miami. I think you know them. And I was talking to them offline about cryptocurrency, and they said that their friends, in this 20-year-old age group, are so into crypto that that's all they have, and to the point where a lot of times the Fresh and Fit guys will have to lend them money for lunch. Not because they don't have money, but all their money is in crypto, 100% of it. But it's not in Bitcoin and Ethereum. It's in all these lesser-known altcoins that they think are going to or have the potential to go up 1,000x, and they're trying to be the next superstar on Instagram, billionaire or whatever that gets rich in crypto. And then they just get completely wiped out, and it gives them that very, very difficult lesson that young investors have had to learn throughout the ages. And there's always, Jim Rogers, I think, articulated it beautifully in the Market Wizards books, where he says you've just got to buy panic and sell hysteria. And sometimes, you can tell when there's hysteria, and when Bitcoin was at 65,000. And I'm long-term bullish on Bitcoin.
Me too.
But you got to pick and choose when you buy based on that panic and hysteria. And I was seeing it on Twitter nonstop. I was seeing it in social media. I was seeing it in all these chat rooms like Clubhouse, where the hysteria was just mind-boggling. And that's something that I think people can sense, but they need to make sure they're not getting caught up in that emotional frenzy. They're going to make bad decisions.
The problem with bull markets is it makes stupid people look smart.
Yeah.
This is deja vu all over again, because in 1929, the saying was, watch out for falling bankers, because they were coming out of the window, killing people in the street below.
Yeah. But at the end of the day, who do you blame? The Fed. It's the Fed, because this is all just pushing people out the risk curve. Well, it's pushing people out the risk curve because you keep interest rates artificially low.
Do you listen to the Fed?
Well, there you go. Good point.
So the whole thing here is, get smarter. That's why we're talking about,
or at least hang around smart people.
Yeah.
Yeah.
I mean, oh my God. It's going to be as Raoul Pal was saying, man, we're going to make so much money, because we have what's that thing called? Green New Deal stuff? Carbon credits.
Oh.
And we have biotech coming online and all that. There's more opportunity today, but not if you hang out with idiots.
Yeah. And I think the overarching theme in pretty much everything that you've said for the last 30 or 40 years is if you're going into an investment and everyone else is doing it and that's what they're teaching you in school, you're probably not going to make money. You're probably going to lose money. But if you're going into an investment and every single person is telling you, Robert, you're crazy. What are you talking about? You're absolutely out of your mind. Don't do that. Those are the investments where you've made the most money. And it's been the exact same thing in my life, in Jim Rogers' life, and probably in Raoul Paul's life.
Yeah, and but like we have no stocks, bonds, and mutual funds because my rich dad taught me differently. So today, like I was saying, and I said this all the time, we own oil wells. We don't own oil stocks. So again, when Biden cut the XL pipeline off, oil went from 30 to 130. Holy mackerel, we're making so much money today. The dangerous thing is people are being wiped out. Inflation's killing them, food and fuel.
That's right.
That's what scares me.
Yeah, and that's the moral of the story, and that's the way these things always play out, is when the central planners try to, or who knows if they're trying to do good, they might be trying to do bad. Going back to Machiavelli, we had that conversation the other day.
Prince.
Yeah, the prince, that's right.
They think differently than we do.
Yeah, but any intervention they have in a free market economy, it's always going to make things worse for the poor and middle class, whether it's through the insidious, invisible tax of inflation, or whether it's just propping up assets that are creating these bubbles where people get completely wiped out and misallocation of resources and malinvestment. I mean, we've got to understand that central planning, or Marxism, as you always say, this is a very, very slippery slope. This is the road to ruin. Or as Jim Rogers says, this is the quick path to the poorhouse. We need to understand that free market capitalism is not perfect, but it's the best system we have to raise this standard of living for the poor and middle class. And the crazy thing is they're trying to use inflation as a reason to tax the rich. And it's just completely perverse because the way you solve consumer price inflation
produce more
is, like we were saying, by producing more stuff. And I just want your audience to think about this for a moment because I really want to beat this dead horse because I think it's important. We are experiencing global consumer price inflation right now, not just this is a huge, huge problem. And their solution is to do what? UBI. Let's give people more money and let's restrict the supply of goods and services even further by making it harder for the producers to actually produce. So what they're doing they're trying to sell this to the general public. The way we solve consumer price inflation is by creating more money and producing less stuff. It's the complete opposite. Yeah, we need less money and we need more stuff.
Fractional reserve system says you put your savings in a bank, let's say $100, the bank can lend out 1,000, 10-to-1 leverage in there.
Yeah, now they don't even need that.
No, and that's
they don't really need reserves at all to lend. They can just create money out of nowhere, and that goes back to the central bank digital currency and them trying to ban cash.
And I think that's why so many young people are in crypto. They know something's wrong. They just don't have the big macro picture of it. So let's get into education because I think that's one of the most important things is who are your friends you're hanging out with? As we talked about here is if you're hanging out with the village idiots, you're falling behind right now.
Yeah.
And I know a lot of village idiots all hanging out together going, holy moly.
Yeah, it is. I think it goes back to that Lenin quote that you and I have discussed extensively where he said there's decades that go by where nothing happens, and then there's weeks that go by when decades happen.
Yeah.
And there's no excuse. You were talking about how people need to educate themselves and to really reevaluate their own personal network and start hanging out with people where they're the dumbest one in the room. But also with the internet, there's no excuse. I mean, going back to when I retired, I didn't know anything about macro.
Right.
I've never taken an economics class. I've never taken a finance class, completely self-taught. And it's just from listening to people like you and Jim Rogers and Jim Rickards and Schiff on podcasts and on YouTube and just educating myself. I didn't have a network back then, but I kind of in a way made you guys my online network
Correct.
just by listening to all of your content. And that's something that anybody can do today.